Hello everyone, this is Anrich. Today on the series of how to save tax in South Africa, we are going to talk about tax-free investments as at February 2022. Let's get into it. Tax-free investments. So what is it? It is an incentive to encourage household savings, and it should be seen as a long-term investment. Now, how does it work? If you invest in a tax-free investment, you don't pay income tax, dividend tax, or capital gains tax on the return of these investments. You are, however, subject to an annual limit as well as a lifetime limit. So for the annual limit, it's 36,000 Rand that you can contribute annually, and in total, you can contribute 500,000 Rand in your lifetime. So, who can provide this tax free investment? You can get these kind of investments at a licensed bank, a long term insurer, a manager of registered collective schemes, the national government, the mutual bank or a cooperative bank, the South African Post Bank, administrative financial services providers, or a person that is authorized by a licensed exchange to perform one or more security services in terms of the exchange rules. The service providers designated by the minister in the Gazette, and only the above are designated. So only the above list of people can provide you with a tax-free investment. So which accounts will qualify as a tax-free investment? We are looking at fixed deposits, exchange traded funds or ETFs that are classified as collective investment schemes or unit trusts, also linked investment products, certain endowment policies which are issued by long-term insurers, retail savings bonds, or unit trust collective investment schemes. So let's do a comparison between the tax-free investment and a standard investment so that we can see what we can save. On interest income, all the interest earned is tax-free in a tax-free investment. In a standard investment, if you are younger than 65 years old, only the first 23,800 interest is exempt from income tax. Interest more than 23,800 will be included in your taxable income and taxed at your relevant marginal rate of tax, which varies between 18% and 45%. If you are older than 65, then the first 34,000 Rand, 500 of interest is exempt from income tax, and anything more than that will be taxed at your relevant marginal rate of tax. So what is the saving on the interest income? The saving you will have is the tax on the taxable interest. So in the tax-free investment, it will be tax-free. In a standard investment, only a portion will be exempt, and anything above that will be subject to standard tax. Now we're looking at dividend income. In a tax-free investment, all dividends received is free from dividend tax. Dividend tax is levied at 20%, and also saving of income tax. In a standard investment, dividends which are distributed to individuals are subject to dividend tax at 20%, and only the net dividend is exempt from income tax. So if you are an individual and you have an investment and you receive a dividend, the amount that you receive will already have the 20% deducted. So in effect, you will only receive 80% of the gross dividend. So what is the saving for tax in the tax-free investment in the context of dividends? It will be the dividend tax which is levied at 20% on the dividend declared. Now let's look at capital gains. In a tax-free investment, all capital gains, when we talk about capital gains, we talk about the profit on the sale of capital items, is tax-free. In a standard investment, a capital gain is subject to capital gains tax. The first 40,000 Rand capital gain is excluded. It's an exclusion that SARS provides to you. And then the net is then included in your taxable income at 40% and then taxed at your marginal rate of tax, which can be between 18% and 45%. The maximum amount of tax that you can expect to pay on a capital gain is 18%. And how do we get to the 18%? We say the 40% inclusion for individuals times the maximum tax rate for individuals of 45%. So, in the context of capital gains for tax-free investments, what tax are you actually saving? You are saving the capital gains tax, which is between 7.2% and 18% on capital gains. So 7.2% is the lower end of the scale and 18% is the upper end of the scale. And I show you here that the 7.2% is calculated by saying a 40% inclusion rate times 18% tax rate, and the highest scale, 18% equals 40% inclusion rate times a 45% tax rate. Let's look at the relevant source codes for tax-free investments. So when you invest in a tax-free investment, the service provider will provide you with an IT3S for tax-free investment. It's a certificate that you receive from them, and then they will use the following source codes. These source codes you will see on your tax certificate, and you will also see it on your SARS tax return. So the first one is 4219, that is all amounts that you contributed to a tax-free investment during the year of assessment. 4247 is any money transferred out of a tax-free investment during the year of assessment. 4239, the net return on an investment, so that will be interest, dividends, capital gains. 4241 is the interest income you received. 4243 is the capital gain, which is the profit on the sale of the capital items. 4257 is anything other, example, manufactured dividends. 4246 is the money you transferred in to this tax-free investment from another tax-free investment during the year of assessment. 4248 is the amounts that you have withdrawn out of the tax-free investment during the year of assessment. 4240 is the net return on the investment if you made a loss. 4242 is the dividends income you received on your tax-free investment. And 4244 is the capital loss or the loss on the sale of capital items. So this list of source codes you can find on your tax-free investment certificate, and you will also see it on your tax return. I highlighted them here to give you a context. So if you see one of these source codes, you will know exactly what it means. Is there anything more to know about tax-free investments? Yes. A tax-free investment is intended as a long-term investment. So normally when you look at retirement funds, you can withdraw 500,000 Rand tax-free when you retire. What this tax-free investment does is it provides you with an additional 500,000 Rand that you can save as a long-term investment. Once you withdraw from a tax-free investment, you decrease your lifetime limit of 500,000 Rand. So ideally, you do not want to withdraw money from your tax-free investment unless you absolutely have to. Also, if you contribute more than the annual limit of 36,000 Rand, SARS will unfortunately add a penalty of 40% on the excess contribution to that year's normal tax payable. So if I contribute 37,000 Rand, SARS will say it's 1,000 Rand extra times 40% is a 400 Rand penalty on your taxable income. So SARS penalizes taxpayers if they contribute more than the 36,000 Rand during a year of assessment. Any portion of the unused annual limit is forfeited. So if you only contributed 10,000 Rand, then the difference of 26,000 Rand is forfeited for that year. You are able to have more than one tax-free investment, but you have to add them all together. Say you have a tax-free investment at ABSA, at Investec, and at Liberty. You have to add all of them together in the consideration of your annual limit of 36,000 Rand. The capitalization of the returns do not affect the annual or the lifetime limit. So, for example, if you contributed 36,000 Rand, you earned 2,000 Rand interest, you earned 1,000 Rand dividends, that means you earned 3,000 Rand on top of the 36,000 Rand that you contributed, that will not go towards your annual or your lifetime limit, and you won't be penalized on that. Parents can invest on behalf of minor children, and then the minor child will use his or her own annual limit or lifetime limit. So parents can invest in these tax-free savings for themselves and on behalf of their children. If they do it on behalf of their children, then the limit that will be used will be that of the children. Unfortunately, tax-free savings accounts cannot be used as transactional accounts. So you can't use this account as a check account or a saving account, put money in, withdraw, and a lot of transactions. So they're not used for that. And also debit orders, stop orders, and any ATM transactions will not be possible from these accounts. So what this means is you can't go to the ATM and withdraw money from your tax-free investment. It is not a trading account, or it is not a transactional account. If you are interested in a tax-free investment, you can ask a service provider, the ones that were listed previously in this slide, about investing in a tax-free investment. What these service providers will then do is they will report to SARS twice a year the following information. They will tell SARS your total contributions per year. You know the annual limit is 36,000 Rand, the total amounts withdrawn per tax year, the total amounts transferred per tax year, and also what returns you realized or what returns you made on your tax-free investment in the form of interest, dividends, capital gains, and losses. Again, the service providers will provide these taxpayers with an IT3S tax-free investment certificate each year. So if you have to do your tax for a specific year, you know you've made an investment in a tax-free investment, you can then request your service provider to provide you with this IT3S certificate. I've then come to the end, and I want to thank you for taking the time to watch this presentation. I trust that you found the presentation useful, and if so, please subscribe to my YouTube channel. Click the notification bell so you know when new videos are released, and also share this video. You can also check out my YouTube channel. I have more videos on there, as well as my LinkedIn. I thank you.